If you have an accountant who doesn't understand your industry, especially if you're in the home-based business industry, a lot of the deductions that you provide to them actually don't get taken. So many things that I think that people are missing as far as deductions go. It's just lack of knowledge. The top 5 reasons that people overpay in taxes are, in my opinion, one, people overpay in taxes because they are not structured properly. That's one of the biggest things that I see. I've had clients overpay upwards of $100,000 a year by not being structured properly. And what I mean by that is that once you get to a point where you're making over $12,000 a year in gross income, you should be an LLC. And what that will do is that will allow you to limit your liability, but it will also allow you to either treat your business as a Schedule C, sole proprietorship, or you can treat it as an S Corp election. And so when you get to a point where you're making $12,000 a year, I feel like you have the ability to surpass that. And so $12,000 a year after expenses, you would want to take that LLC and treat that as an S Corp election for tax purposes. The reason why I tell you that you should have it in effect once you make $1,000 a month or $12,000 a year in gross is because you have the ability to go backwards and treat that LLC from the date of inception, as long as that's within the last 3 years and 75 days. We can go back, treat it as an LLC at as an S Corp election. And then what that will do is allow us to bypass 80% of the self employment taxes. Self employment taxes are 15.3% of every dollar you make in net income. So if you make $50,000 a year with your business, after expenses, you'll pay $7,600 in self employment taxes, or you can pay $1,500 in self employment taxes if you actually have an LLC treated as an S corporation. So that's one of the ways, the structure. The second thing that I see as far as people overpaying in taxes is has to do with the structure and the payroll. So one of the reasons why when you have an S corp, you're required to process yourself a paycheck. And so yes, it could be just you. But there has to be a payroll that's established, and we can help do that. But that $50,000 that you would pay yourself, let's say, is what your net income is after expenses. And then from there, 20% of that, which is $10,000, that's what you would receive in a paycheck. So that $10,000 is subject to self-employment taxes, which is $1,500, and the rest of the money, the $40,000, flows back through to your personal tax return, and you only pay income taxes on that, federal and state, if you are in a state that requires state taxes. Now, the $10,000, you would pay income taxes on that, plus you would also pay the self-employment taxes. But you are eliminating $6,000 in self-employment taxes. So what ends up happening is that I see that people are overpaying themselves in a paycheck, and they may be paying themselves 50% of their net income from their business in a paycheck, or 75%. I've even had people actually pay themselves more in a paycheck than what their business is actually generating, meaning they're actually paying in more in self-employment taxes than what they make, which is crazy. So the one caveat is the as far as the overpayment is that you're paying yourself a paycheck, and that should be typically 20% of your net income. Now, the third thing that people are overpaying on in taxes would be that they're just missing out on deductions. One of the biggest things that you can claim as far as a business, especially if you have a home-based business or you actually work from home, if you have an office and you work from home as well, you can do something called the Augusta Rule. And the Augusta Rule says that you can rent your house out 14 days a year. You don't have to pay taxes on it. So my house, for instance, could go for about $15,000 per day. I'm hosting an event coming up, and that's going to be a 3-day event. I'll probably have about 100 people here at my home during the day. That my house, the going rate would be about $15,000 per day that I'm going to be renting my house out to my business. You have the ability to do that typically around $500 to $1,000 a day if you're hosting events, having people over for presentations or for training events. It works really well. And you can do whatever the going rate is for your area. So saying that it is $1,000 a day at the going rate for a hotel or an event center in your area, that's what you can actually list for your home. And you can do that up to 14 days a year. You can also rent it out. Like if you have like an Airbnb and you rented it out 14 days a year, you actually don't have to pay taxes on that. But once you go over that 14 days, all of the income has to actually be claimed. So the Augusta rule is a very good one. Next, one of the other things I think that people miss in taxes that they're not claiming are deductions such as cell phone, internet, the travel. Those are some really good ones, and they're things that you're already spending money on currently. There's also auto expenses. So there's just a lot of deductions that end up not being taken. And a lot of times, if you have an accountant who doesn't understand your industry, especially if you're in the home-based business industry, a lot of the deductions that you provide to them actually don't get taken. And that's one of the reasons why you're overpaying. Or if you're using some software online, I have noticed that depending on your income, it doesn't actually generate the deductions that you think that you're actually taking. So you may be putting in those expenses and not actually getting those deductions. So that's number 4. And as far as number 5, I think the biggest thing, the reason why people are overpaying in taxes is they just don't have strategy. So they don't understand that they need to hire their kids. They don't understand that they can write off their swimming pool. They don't understand that they can write off education for their kids if they hire them. They don't realize that they can force things to be tax deductible, like travel, which can also caveat into a vacation. So there's just so many things that I think that people are missing as far as deductions go. It's just lack of knowledge is one of the biggest things. But at the end of the day, that's why I'm here for you to book a tax strategy session with. You can read my book, which is very helpful, More Relaxing, Less Taxing, so you can get tax tips to help you understand employee benefits, hiring your kids, the Augusta rule. All of these things are in there. LLC tree is an S corporation. So get my book today, More Relaxing, Less Taxing. You can purchase that directly on our website at otvtax.com. or on Amazon, or you can schedule a tax strategy session with us directly on the website. So I look forward to sharing more ways to help you keep more of your hard-earned money, and have a great day.